What's good, y'all? This is Joel, and I'm coming at y'all with another video. So with this video, this is going to be a recap for Monday, July 17th. So if we jump right into Forex Factory, we'll see that this is one of the few trading weeks where I'll be behind the charts every single day, right? Like there are no major news events that would, you know, prevent me from being behind the charts actively trading, right? There's no FOMC, there's no NFP, there's no CPI, PPI events, there's no speakers. What is the name of a speaker? Let me quickly find an event so you guys have an example. Actually, I have to probably go back. You'll see a Fed chair. Yep. So none of those major events that are happening for this week, which is great. So this is a straightforward week. Pretty much we'll just be behind the charts every single day, following the same strategy, and then we'll see if the market presents us with any setups. So this day here, Monday, July 17th, is actually a losing trading day for me. I took a small loss, but no need to concern ourselves with that because the logic and everything there is still the same. And you guys will see what happened with this trade. So, as always, we start at 8:30 and then we look to the left and the right to mark up our liquidity pools. So, to the left of 8:30, we have this high right here. Right, I know it's not too high. I know most people will probably just gravitate towards this level right here. But technically, right, this is the most obvious swing high. Now, for these swing lows, right, my eyes immediately gravitated towards this level. And if you look at the top left corner where my cursor is at, the L right here, this is the low number. So the low for this candle here, the last few digits are 555.4, and the low for this other candle is 555.6. So this candle on the left is technically lower than the candle on the right, so it is valid to use for sell side liquidity. Um, and I actually like it because it pretty much makes almost equal lows, or what retail sees as a double bottom. So a lot of traders are buying from this level, and other traders are potentially putting sell stops. So if price goes below this level, um, they'll get tripped into a sell position. They'll, get trapped. Um, so immediately once I see double tops and double bottoms, I would ideally prefer the market to go in the opposite direction and then break structure and then target these double, like in this case, a double bottom as a final target, because I see that as liquidity. Retail traders see that as a trading opportunity. I see that as a target, right? So in a perfect world, I would like to see price push up to take buy side liquidity first and then break down and make its way down to then take out the sell side liquidity as the final target, because these relatively equal lows, virtually equal lows, um, is usually a strong magnet for price to attack later on. Um, so now if I hit next, right, we're seeing this next candle. This candle right here is our 8:30 candle. So you're seeing that this 8:30 candle slashed into buy side liquidity, and it did not take out the sell side liquidity because the wick ended off right here. So immediately, right, we put our blue eyeball highlighting to us that buy side liquidity was triggered. And so now at this point, what we want to do is now we pretty much want to fast forward until 9:30. Um, we just want to make sure that sell side liquidity doesn't get purged into before 9:30. We want to see this liquidity pool stay intact, right? And allow price to go up higher. After 9:30, whatever high is made prior to 9:30, we want to see after 9:30 that a new high gets created, right? So then it can fulfill essentially our confirmations, right? Because we want the push after 9:30 to essentially create the highest point for the trading session and hopefully for the trading day, so that when we if we were to take it down for a sell, we'd basically catch the sell from the peak of the move all the way down to like the sell side liquidity rather than trading in like the middle of the range or something. So right now I'm just fast forwarding it until 9:30 because all of this information is pretty much irrelevant, right? Because we're in buy side liquidity. All right, so this candle right here, this is the high that was made prior to 9:30. Boom. So this is the 9:30 candle. So as we can see, this 9:30 candle made the highest high of the session, right? And with this high being made, uh, the last swing point was at this candle right here, right? So we have our light bulb right there for the last structure point. So now we're waiting to see if price is going to keep pushing higher or breaking structure lower. So as you can see, another high right here got cleared with this candle. So this is the lowest, this is the last swing low. So we'll mark that as a structure point, right? The high again got cleared, but there's no swing, there's no new swing low. So we keep the light bulb there. Again, high cleared, no new swing low. So this is our last structure point. Right. So now we see a minor low get cleared, but I like to mark price from the last swing position before the high got cleared. I don't really like to mark this as like a low being taken. Okay, so you're seeing here at this level, uh this push down broke this level here. So we are technically now bearish. Um and now we want to look for any fair value gaps within the displacement high and the displacement low. So the displacement low and the displacement high, which I just marked in pink, this is essentially the range where we want to find a fair value gap. And as you can clearly see from the gray shaded box, right, we do have a fair value gap within this range. Now, I also like jumping into 2 minute and 3 minute to see if I see anything, right? And right now, there's not really anything. Like on the 2 minute, there's a tiny gap, but that gets covered with this gap. And then there's a larger gap down here. But remember, this larger gap, at least right now, is pushing outside of the range. So this would be pretty much like our only legitimate gap on the 1 minute time frame. Now, something else to be aware of, usually whenever I see price make a run up and then break structure down, in a perfect world, I would like to see it make like a straight move down, like an aggressive move down. I don't really like seeing bullish candles. Like I don't like seeing a little push down and then a slight retracement up to then go back down, right? Like I want to um see price as soon as it makes the grab. I want to see it pretty much go straight down right away. Um, so this move here, um, it's sort of not really a desirable, like I don't really like to see that, like that slight retracement. So I do remember on this trading day, once I saw this little retracement up, I immediately knew like, okay, like I'll take this trade because I'm seeing legitimate gaps, right? I'm seeing price move down with displacement. But because I don't really like this move, for me, I took this trade with half risk than I normally would for my position, right? So um, from here, this would be my entry, and I would just put my stop loss at the very. I just like putting my stop loss at the very high, just to be safe because it's usually is a relatively safe place to put your stop loss. Some traders like to put their stop loss at the very top of the candle that created the fair value gap, or like you know the the highest candle, because usually a fair value gap is created with a three candle pattern, right? They'll put it at the top of the first candle or above the most recent swing. For me, I like putting it just above the high, because we don't anticipate price to come back up to that level, and if it does, it's usually because we were just wrong, right? Like the market just didn't want to give us a trade, which is fine, right? You can't be right every single, you know, no strategy is 100% right or has a 100% win rate in this market. Like that's literally impossible. Um, so what we do is like we just take high probable setups, right? And based on experience, based on all these videos I've been dropping, you guys are seeing uh, this phenomena repeat, right? Of price pushing bullish and then breaking structure and then reversing, going bearish until it reaches the opposing liquidity pool. And it could be that price is typically purging buy side before pushing down lower. This could be just like a seasonal tendency, right? Because this usually happens more often than like the opposite. But There's times in the marketplace where the opposite happens, where sell side gets purged first, and then price starts reversing, going in the opposite direction to clear buy side. So it, it just all depends. But in this case, right, this is a setup that met all of our confirmations. We had a break of structure, right? If we look at the top right for the confirmations, the little cheat sheet, we marked the liquidity pools. It grabbed the liquidity with the eyeball right here. Did it break structure? Yes, it indeed broke structure to the downside, so we're bearish. Did it leave a fair value gap in either 3 to 1 minute? It did in the 1 minute time frame. We found this fair value gap right here, and it is a legitimate fair value gap, right? There's a gap that you just can't miss while trading. Um, and we set the limit order right, our stop loss above the high, and our take profit at the liquidity pool. So it's down here for a 2 to 7.5 risk to reward. So at this point, I have my sell limit set. It's 9:45. I would have this sell limit active until 11 o'clock, um, and or until the liquidity gets taken whenever it gets taken. So a limit order set. Price is just moving, moving, moving. So then boom, right here at 10:08, 10:09, that's when my sell limit order got taken. So now, oh, got activated, sorry. So now I am in the trade. So at this point, what I'm looking at, basically this level right here, and I'll mark it in purple. So I consider um, this point up here down to this low down here, I consider that to be one like price leg. So I wanted to see price come back up, activate my sell limit, and then come down and close under this purple line. Once I see price close under this purple line, that is when I would move my stop loss to break even. And then, you can also take partials at this level and then, expect price to go down. And then once price reaches the sell side liquidity, that's when I close out my full position. So that's what I'm waiting for. I'm just waiting for price to make its way down here at this level to close under this low, and then that's when I can move my position to break even. But as I mentioned at the beginning of this video, this led to a loss, right? Because price was sort of like creeping back up slowly, slowly, slowly. It came up here, then it broke structure like at this level here, and then at this level again. Um, so I felt like, I was pretty confident that price was gonna go back down. Uh, Even though I didn't really like how, price sort of retraced here before it actually made the structure break, I was still pretty confident that this trade would go in our favor. But as you can see, price came up and stopped us out. So even though this was a losing trade, um, you know, I don't think we ever lost because the logic was still there. We follow all of our confirmations, and we follow our trading plan, and that's what's going to make us successful in this marketplace. Every trading strategy has losses, right? And it all depends on your trading strategy, right? Because if you have sound risk management, then losses should be super minute, like it shouldn't be this crazy obstacle that you're not able to pass through, like if you have sound risk management, right, where you're only risking whatever percentage every single trade, um, then you should be able to bounce back from a loss no problem. Because for example, if this trade went through, this could have been a 1 to 275 risk reward, almost a 1 to 3. So like that, whenever we win, in great fashion. So it gives us that buffer, so that in the future when we do take losses, right, like the losses won't really affect our account. It's the cost of doing business. Like every business, whether it's a restaurant, whether it's real estate, whether it's just any business, um, there's gonna be expenses, right? A clothing brand, like you're gonna have to spend money to buy like plain clothing to then put your logo on it, right? Like every business has some sort of expense. So like if you're coming into the market to trade, right, and you have a losing trade, or you may have two losses in a row, whatever the case may be, just consider that to be, the cost of doing business, the cost of, being a trader for staying in this game. But this loss didn't concern me whatsoever, just because when you look back at it, our target was a double bottom, which it's obvious that there's liquidity, that there's orders down here. So it's highly probable for the market to come up, activate this order, activate at the fair value gap, reject the fair value gap, and then make its way down. Like I've seen that happen so many times. So just to see is one loss here, it doesn't discourage me. This doesn't mean that the strategy or the model is broken. Everything's working fine. This is just one of those losses that you just have to experience as a trader, but that's perfectly fine. Like we follow proper risk management, so our account is fine. We knew exactly how much we risked. We agreed to that risk before we took on the trade, so we knew exactly how much we were risking, like what percentage. Um, and so this is just all this is. This is just part of the game. Um, so that's that. I'll just fast forward the rest. You can see. I mean, prices sort of continues up. So I want you guys to begin looking at your stop loss as a good thing, because a lot of traders they'll say, oh, um, if price is getting close to my stop loss, I should just take off my stop loss. Well, if I took off my stop loss, guess what would have happened? Price would have kept reversing against me. So the point of your stop loss is to stop your loss, right? So um, if it's getting close to your stop loss, then sure you're in drawdown, but you only lose the trade once your stop loss actually gets hit. So there's no reason for me to move my stop loss, because I always put my stop loss in a very logical location, right at the highest high or the lowest low, location that I don't really expect price to go after. And if price does go after and tap my stop loss, then it's because I was wrong anyways, right? I'm not afraid to be wrong, because I know that more often than not, when the market delivers a setup and I take it, usually it goes in my direction, and usually I'm able to walk away with some sort of profit, if at all, like it being able to hit my final target. So that's what doesn't concern me, because I know losses are part of the game. And if the market came up and hit my stop loss, I don't want to be in the trade anyways, because I usually mean that I was wrong, and that the market probably wants to go in that direction anyways. So don't see your stop loss as a bad thing. See your stop loss as a good thing, that it's actually keeping you in the game. Because if I took out my stop loss and then price continued up, a 100, 1,000 pips north, right? Like if it kept going bullish, and say I went to sleep or something, and I couldn't manage a trade, then who knows where my account would be, right? It could be a blown account. I could lose like half my balance. All these things that could have been avoided when you could just have a stop loss in place. So having a stop loss is actually a good thing. It keeps keeps your account afloat if you know what you're doing, right? And you're following proper risk management, and it helps keep you in the game for another day. So this was a losing trade, but I still followed all of my confirmations. The logic was there with this strategy, um, and you guys see how I'm just doing the same thing over and over. And there's gonna be some days where the market doesn't give a setup. There's gonna be a lot of days where the market delivers a setup and we're able to win, and then there's gonna be those few days where we experience losses, but it's part of the game. So no reason to concern yourself. So if you found the video helpful, do leave a like, subscribe, share this video with anyone you think would find to be helpful. Any young aspiring trader that's learning and trying to figure it out. Um, do want to keep dropping these videos daily to help you guys grow as traders, and hopefully you know you see the power in my strategy and you decide to adopt it, despite seeing the loss today, which every strategy experience losses. Um, so yeah, once again, this is Joel, and I'm eventually coming to you guys with more video coming soon. So this was that. If you enjoyed the video, leave a like again, subscribe, leave a comment if you have any questions, anything. It's Joel. I'm out. Peace.